Hello and welcome to this Wealth of Advice market update recorded on Monday the 5th of August 2024. If you go back to the very first market update that I recorded in March 2020, obviously the world was in a bad place, COVID lockdowns were upon us and markets had crashed all over the world, and we recorded these updates kind of weekly, monthly thereafter, and 4 years later here we are still recording them now. We always had scheduled to record this market update today. Just so happens that in the last few days world markets have gone extremely volatile. The lunchtime bulletin news had the main headline that world stock markets are tumbling all over the world. Obviously that was the first time I've heard world stock markets mentioned on the radio over the last 12 months when things were going really well. Since October they were never mentioned once. So obviously bad news sells, and the news that's in the press right now and on the TV news channels will be quite worrying for some people watching that. However, we do have to counter that with actually what's kind of going on in the real world. And I have to say, standing here right now presenting this to you, I am not overly concerned like I was in March 2020. It's a totally different thing that's happening right now. What we're seeing in the world right now is a global sell-off of stocks and shares on the back of Jerome Powell, the Federal Reserve Chairman, last Tuesday doing his update and saying that the US are not going to reduce their interest rates at least until September. By the end of the week, experts around the world in various different markets, central bankers, etc., were mulling over the figures and data, and then some negative data came out in America on Friday afternoon. And as a result of that, people looked at the share prices of some of the big stocks all over the planet, and the big seven are the ones that's been quoted in the press. Your Microsoft, Amazon, Netflix, Google, Facebook, Tesla, they're the ones who are being mentioned. Nvidia, the biggest one, who has their next earnings to be scheduled at the end of August. So they're worried that these huge companies whose share price shot up over the last 12 months are not going to do very well in the coming months. So there's been a huge global sell-off. If you look at the VIX index, which is the measure of risk, just putting a chart on the screen right now, and this chart isn't here to scare you, but at 8 o'clock this morning you can see the VIX index had risen to 63.67 there. And if you look back at previous worrying times in the world, COVID in 2020 and then the 2008 financial crash, you can see that what happened today has seen a risk index increase, a fear index sometimes it's called, up to the level that was last seen at the beginning of COVID. You then look at the next couple of charts that I've put on there, and you can see that just in the last hour or so when we've updated there, it does say 9:05 GMT -5. That's American time that it's based on there, but we've just put that in there from about an hour ago, and you can see that it's down to around about 39. So it's still quite a high level overall, but if you look at sort of where it is in comparison to COVID and the 2008 crash, it is well back down to much lower levels. But it has to be said, if you look at the chart now, which goes back over 12 months, you can see that after we had volatility in the world up until the end of October 2023, everything went calm and was flat, and the VIX index stayed pretty steady below 20 for almost 12 months really, and then we've seen this spike right now. But as you can see on that end chart there, although it did peak just before lunchtime, it is starting to come back down right now. So the general message that we're giving to our clients right now is not to panic and make knee-jerk decisions. We were speaking with various fund managers this morning and going through all of this. Most portfolios that we recommend into have gone underweight in stocks and shares over the last few weeks and months anyway. Most main fund managers saw the US index hit all-time highs in February and March, driven by those big technology companies, and skimmed profit off those. And most portfolios which have a good exposure to government bonds, corporate bonds, are showing positive returns on the government and corporate bond side of it, because as interest rates are expected to come down and there is volatility in the stock markets, money is piling into bonds, and we've seen an uptick in bond values today. There was an article came through on my phone last night on Bloomberg saying loads of money was piling into US Treasury stocks. It's a safe place to go. So the low risk part of the portfolios are all doing very well. So we'll jump straight into market performance year to date. So even with the recent volatility we've seen over the last week, you can see that the S&P in America is still up over 12%. That is recorded up to Friday afternoon. The MSCI World Index up 9.3% to Friday afternoon, and the FTSE 100 up 8%. Obviously, If we'd have said on January the 1st that these three indexes would be up by these levels by the 2nd of August, we'd have all been very happy. It's good returns. However, the greedy investor looks at the last column on that chart there and sees that the S&P did reach all-time highs and was up almost 18% of the year and has come back. But for all of our clients who've been invested over the long term, who've been fully invested over the last 12 months or so, you are still in a profitable position since the year to date. And if you look at market indices over the last 12 months, all of them are up still nicely over the last 12 months. So yes, it is a worrying thing when you put the news on and listen to the radio channels and you're hearing these headlines. But markets are having a little bit of a correction right now. But we think most of our portfolios, which went underweight in equities a few months ago, but all of the portfolios that we recommend, we have confidence in all the fund managers who we use, and we don't want to make any immediate changes to them right now. In other news, which we had prepared for this presentation a few days ago, and I know the more recent news has taken precedent why we put that at the beginning. However, something massive happened in the UK on Thursday. The Bank of England had their interest rate committee meeting, and they decided to cut interest rates from 5.25% down to 5%. The bank governor, Andrew Bailey, said just steady away. A 0.25% cut was enough. Let's see what happens. There may be more rate cuts as we go on, and I think the expectation is that we will have at least one more rate cut in the UK, maybe in September. We'll wait and see when that happens. But the minutes indicated that the Bank of England believe lower borrowing costs only slowly affect markets, and they might only, as I say, do one more rate cut this year and a few next year. But it's positive that rates have started to go down in the UK. One of the most common questions I've had put to us from clients over the last few weeks since the Labour Party won with an absolute landslide majority in the general election at the beginning of July is what will the Labour Party do next to increase taxes? My own personal gut feeling view on this is they're not going to do very much. They didn't put anything in the manifesto to say they're going to increase income tax, national insurance or VAT. They didn't rule out increasing inheritance tax. I do think inheritance tax is easy pickings for them. It's not a type of tax where if they increase it, there's an outrage on the front page of the Sun or the Daily Mail or the Daily Express or what have you. But, and this needs to be understood by everyone watching this, is the Conservatives in effect have done a lot of their dirty work for them because there's been no increase to the personal allowances for income tax. So 12,570 is the amount people can earn before they pay income tax. There'll be a lot of people with their state pensions going up as much over the last few years now falling into pay tax where they wouldn't have otherwise done so. The higher rate limit for people paying 40% tax has been capped at around about 50,000 now for a number of years. Capital gains tax allowances have come all the way down, so anyone with an investment property, stocks and shares, those sorts of things that might be getting sold are paying more tax. And we're starting to see already in the first few months of this new tax year where the relief's going down and the allowances not going up, is more people are paying more tax. So as I say, the Conservatives have done a lot of the hard work for them. What may come in the years to come, we'll just have to wait and see. Across in America, again, so much has happened in the last couple of weeks. President Biden announced a couple of Sundays ago that he's not going to stand for re-election, which was a seismic event for the world politics situation. It was expected that he was going to go for it, but you can see in the last couple of weeks leading up to that, his health was suffering a little bit. He was coming out and saying some crazy things. He called the president of Ukraine Vladimir Putin, and he never really recovered from that. His vice president, Kamala Harris, has announced that she's going to be the presidential candidate, and she's getting support from a lot of the Democrats, across the main Democrats in the party. And you can see from the charts that were shown on the screen there that she's had a great couple of weeks. The American election, make no mistake about it, is all about who raises the most money and has the most advertisements. Hundreds of millions, if not billions, is spent on advertisements in the lead up to the election. Kamala Harris raised $200 million of extra campaign finance in the week after Biden said he was going to stand down. Trump had a bit of a nightmare on a panel of interviewees the other night when he said things which were deemed to be racist and such like. So she's really come back, and as you can see from the charts there, her ratings have gone all the way up. It'll be interesting to see how her ratings fare in the next couple of weeks. Will the Democrats get the blame for the current turmoil in American markets? Obviously it's the Federal Reserve guy who came out with his statement last Tuesday and said they weren't going to cut interest rates just yet. And as I said, just to summarise what's been going on in the world today and on Friday, it's this fear that the American market is going to go into a big recession. So the hard landing that we have avoided all year and believe we'd avoided, is that's what scared the markets. Is America going to have a big recession? So that will obviously have a big input as to what happens in the US election. So cynical me, looking at world news, is looking at this and thinking, well, if the Democrats can influence those people in positions right now, they may actually try and make that happen, but we shall see. It should be noted that across in the US, the same as in the UK, we have our Bank of England interest rate meetings periodically. The US have the same. The next one's not scheduled for another 6 or 7 weeks from now. However, if there is stuff going on behind the scenes which looks like it could be a threat to their economy, then there is another branch of that arm that can step forward and say, no, we need to look at this now and maybe cut interest rates. And that was an article that the Telegraph pumped out this morning as one of their headlines about 11:30 this morning, was saying that the US may cut rates quite soon. None of the fund managers we speak to are expecting that to happen. And as I said, thankfully, as we've recorded this bulletin, the VIX index has gone down, so risk is reducing slightly. But if you look at where most US markets open today, the US markets typically open at 2:30 UK time. A lot of them are open 3, 4, 5% down. And as I was just looking a few minutes ago, something like 2.5% down. So you can see that there's still investors out there who are buying the market, because ultimately, as there's a big sell-off, people will look at the share price of different stocks around the world and they will look cheap this afternoon. Microsoft's down, Nvidia's down, Google's down, Amazon's down. All these big stocks are down, so people will see them as an opportunity. But we've also seen over the last month that a lot of money has come out of the bigger tech stocks, the bigger companies overall, and have been going into the smaller companies in anticipation of interest rates coming down. So hopefully, UK dropped interest rates last week. We'll be keeping a very close eye on what happens in America. Hopefully America and the Federal Reserve people get their act together and cut interest rates at the right time in the coming weeks, and hopefully head off these fears that exist in the market. But as I say, please be reassured, Wealth of Advice are in contact with all our major fund manager partners who we use. We had a big discussion with several this morning. I've just noticed again on my phone in between recording this that another fund manager sent a long bulletin across explaining what they think's going on. And the key message to everyone is not to panic. We've been through a lot worse in so much as what COVID was. That was an actual real event in the world that was stopping the world from trading, stopping the world from working. What's happening here, we think, is just a rewind of too much money going into particular parts of the stock market at the beginning of the year, coming off a bit as earnings have come down, and obviously the fear that there may be a recession in the US. But some data that's come through already this afternoon is showing that actually GDP figures are going to be higher, outputs higher in certain areas. So please don't be afraid. If anyone needs to get in touch, please do so by ringing us, getting in touch through the usual channels, and hopefully we'll be able to answer any questions or queries you may have.